But here's where it gets exciting. Let's start with the big, bold claim making rounds on X. Kaspa today looks just like Bitcoin between 2012 and 2016. Now, for those newer to the space, let me put that into perspective. Back then, Bitcoin was trading for just a few dollars to a couple $100s. It was mostly ignored by mainstream media, ridiculed by traditional finance, and only beginning to form a real community. Yet under the surface, the fundamentals were quietly strengthening. Hash rate was climbing, adoption was creeping forward, and early believers were stacking sats while everyone else laughed it off. Fast forward a few years and that funny internet money went from obscurity to a multi-thousand-dollar asset, setting the stage for the institutional wave we see today. Now, why compare Kaspa to that era? According to @Kaspa, the charts tell the story. Both show a parallel accumulation structure in their first few years, both launched with strong momentum that later consolidated into a base. Both carried an underlying parabolic potential that only a handful recognized early. But here's where it gets exciting. Kaspa isn't just repeating Bitcoin's early cycle, it's upgrading it. Instead of 10-minute block times like Bitcoin, Kaspa runs on a block DAG architecture that can process blocks every second. That makes it 600x faster without abandoning proof-of-work security. Think about that. Bitcoin proved POW works. Kaspa is proving it can scale without sacrificing decentralization or speed. These early comparison analogies can sometimes feel overhyped, but in this case they're actually useful. Because if Kaspa really is in its 2012 Bitcoin moment, then the upside potential is staggering. Back then, most ignored Bitcoin because it seemed too new, too unproven. The same could be said about Kaspa right now. The question is, do you want to be the person who ignored the signs again?